Greetings, my fellow financial ninjas. Today, I am going to talk about what type of investment vehicle is best suited to become wealthy fastest and most efficiently. And the two biggest asset class that I'm going to talk about is real estate versus stocks. I'm going to list out different parameters and then we will choose which of the two investments is better based on those parameters. And in the end, we will come up with the conclusion of which one is the better of the two types. Now, remember, this is just a comparison between the two asset class and doesn't mean that you should be exclusively investing into one over the other. Oh, no, no, no. That's not what I mean. All I'm trying to do is tell you where you should put more of your money so that it works for you. So if it's real estate, that doesn't mean that you should not be putting any money in 401k. You do not get a pass on that. If you're thinking, oh, I'll just buy properties and then with the remaining income, I will go and buy Louboutin shoes. Louboutin? Is that how you say it? I saw that documentary on Netflix. It was kind of interesting. And because it has a red sole, those shoes are ridiculously expensive. But I think they're only women's shoes. So if you're buying it for your wife or girlfriend, oh, no, 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 no. We're not going to do that. As financial ninjas, we are going to invest in all asset class. Let's look at parameter number 1, passive income. Now, passive income can be provided by stocks by investing in dividend paying stocks and in the real estate via the rental income that you get. Now, there's the other part, which is appreciation and all of that, but we'll keep that as a separate parameter and do a compare and contrast in a separate criteria. But as far as just pure passive income is concerned, in stocks it would be dividend income, and in real estate it would be your rental income. This is a no-brainer. Obviously, the stocks shine over real estate because you really don't have to do much. You put the money in, and every month you get your money, you collect the check, and that's it. That's pretty much it. However, when you compare that to real estate, there's a lot of stuff that goes on. You have to manage the tenants. And even if you outsource all the duties of a landlord to a management company, you still have to be on top and do some work. So as far as pure passive income is concerned, stocks definitely shine. So this one goes for stocks. Parameter number 2, returns. Stocks have traditionally returned about 8 to 9%. The S&P 500 index, which I talk about all the time, has returned about 9% in the past 50 years or so. So we can kind of assume similar returns over the next few years. And if you compare that with real estate, it's more closer to the rate of inflation, which is about 3%. And some of the more popular areas or bigger cities, especially the coastal cities, the rate has been somewhat higher, about 4 to 5%, depending on the city. Having said that, what you can also need to look at is the leverage. And because property has leverage in it, the actual rate of return tends to be more. And what I mean by that, so let's say if you are buying a house that's $100,000 and you pay 20% down, and let's say the house goes up by 10%, so your total payout is going to be $10,000, which is almost 50% of your initial down payment. So that's a tremendous return. So in this particular criteria, I think I'm going to go with real estate. Parameter number 3, ease of liquidation. This one is obviously a no-brainer. Stocks are much more liquid compared to real estate. The process involved in selling a property is long and tedious and tiresome and complicated, and there's fees involved and all sorts of things. When you are trying to liquidate stocks, all you have to do is go into your brokerage account, put a sell order, and sell the stocks. So this criteria obviously is won by the stocks. They are way, way more liquid than real estate. Parameter number 4, management. This again is a very easy parameter to judge on. The stocks, there's really no management involved. All you have to do is invest your money in the stocks and let the management take care of the normal functioning of the company. On the other hand, real estate is more of a business, and so there is a lot of management involved. And as I mentioned earlier, you can have a property management company that can do the work for you, but even then, you have to make sure that you are on top of what the management company is doing. So in terms of management as the criteria, stocks win this battle. Parameter number 5, leverage. This again is an easy criteria to judge. There's pretty much no leverage involved in stocks. I mean, you could invest in options, but that is something that I would not recommend, as I think they're incredibly risky. So unless you are a professional, I would say stay away from options. In terms of leverage, this particular criteria becomes a huge advantage. So let's say if you're buying a property that's 250,000, all you have to do is put 50,000 as the down payment, and you are essentially controlling $250,000 worth of capital by using $50,000. So that becomes an incredibly powerful tool, and because of that, your actual returns tend to multiply. Like I gave in the example before, the 100,000 house, the actual appreciation on the house was only 10%, but the return on your initial investment is 50%. So that is something that the real estate investment wins hands down. The next criteria is speed. When we talk about speed, I'm talking about there's here again there's two criteria that we can look at. One is the financial independence, so which one of the two vehicles will help you become financially independent faster, and the other one is just over a period of time, if you consistently invest in either of those two, what would make you more wealthy. And in this particular scenario, it's more debatable on which one is better. In the first criteria, which is the financial independence, here I think the real estate has an edge simply because it is able to provide you with more passive income as compared to stocks, which via the dividends, the passive income provided is much lower. However, when it comes to consistent investment over a period of, let's say, 20, 30, 40 years, the numbers are much more fuzzy, and it's kind of hard to tell which one would be better. So I think this particular criteria, it is kind of debatable, but I'm going to go in this case with real estate because I think it still has a slight edge over stocks. Parameter number 7, taxes. Here again, the real estate shines through simply because the tax benefits of investing in real estate far exceed those that you can get from stocks. There's all sorts of things. There's the 1031 exchanges and depreciation that you could capture, and so many tax benefits in real estate that stocks are nowhere near that. So in this particular criteria, the real estate wins hands down. Parameter number 8, risk. This again is more fuzzy when it comes to evaluation against the criteria of risk. There is a school of thought that thinks that real estate is more risky because of the leverage and the fact that the tenant could destroy the property, and a lot of other things such as flood and fire and all that stuff. On the other hand, stocks are pretty risky too. There are companies that could go out of business. There are so many of them that have been used to do well. I remember when I was younger, I had invested a lot of money in Sun Microsystem, and that company, oh boy, I'll make another video on Sun and what happened in back in 2000, 2001, and a lot of people lost a lot of money. So stocks are also quite risky. So in terms of risk or safety, I'm going to call this a tie. I think both of them have some kind of inherent risk that you have to take, and so I don't think either one of them has an advantage over the other. Parameter number 9. This is related to the payout. Which one is better in terms of the payout? I think here again the real estate shines through because the monthly payout that you get from rents is much higher and better than the ones that you get from stocks, which is really in form of the dividend income. And also in this case, as you go on paying down the mortgage, which is actually done by somebody else, the renter, that's paying down your mortgage. So as they go on paying down your mortgage, your liability goes down, and over time the rents go up, and so your monthly payout could go on increasing. And once you are done with paying off the property, all the money that comes in, except for the taxes and maintenance, is all money in your pocket. So the monthly payout, I definitely think real estate wins this one. And our final criteria, control. In terms of control, again, this is a no-brainer. You barely have any control over how a company is managed unless you are Warren Buffett and own 50% of the company. So in this particular case, if you had a real estate, it's completely up to you how you manage it. You can put money into it and raise the value of the property. It's up to you what kind of tenants you want to take, what kind of background checks you want to run, and so on and so forth. So in terms of control, you're much more in control when it comes to real estate compared to stocks. And here you can see the summary of our findings. And the winner is real estate. Having said that, go buy some stocks, go buy some real estate. We are financial ninjas. We invest in both and try to maximize our returns with maximum diversification. If you like this video and found it useful, please smash that like button, subscribe to my channel, and share with your friends and family. I'll see you in the next video. Goodbye.